SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, you got Sean Smith here, managing partner of Search Fund Ventures and founder of SMB Investor Network. And today I'm joined by Dylan Gans, who founded one of the more innovative brokerages out there. And really it's a VC-backed, tech-enabled brokerage. I mean, all the great ways you can take the business brokerage industry and investment banking industry. So, Dylan, thanks so much for joining.
Great to be here, Sean. Excited to catch up. I mean, we've been talking for like 3 years now, so it's about time we're on a podcast together.
That's right. Yep, got to make it happen. So, why don't you tell us about the background of Baton, your background, and really kind of what led you to solve the problems that you're solving today?
Yeah, definitely. I think like a lot of founders, I grew up starting businesses and around a bunch of entrepreneurs. My grandpa had a medical practice. My dad had a construction company, and both of them shut their companies down. And I always thought that was weird. I was like, feels like there was a lot of value there and they just ceased to exist one day. So that was like always in the back of my mind. I joined the founding team of a company called Good Uncle. We were a food production company, like a ghost kitchen back in 2016 before ghost kitchens were a cool thing. I really did everything at that company. And then we sold that business to Aramark, which is a Fortune 500 food service provider in 2019. And I got to be really close to that sale and see how hard it was to sell a business. My co-founders of that company sold their last business to another public company for $100 million. And it was still like a really challenging thing to go through. So you figure if it's hard for that cohort, it's probably hard for the mom and pop company who's never done this before, right? So that was a little bit of an insight. Stayed on at Aramark for 2 years, which was awesome. I was like 25 years old and I got to be a VP at a public company because we kind of were this small org that just got swallowed up to the top of this company and brought in a little bit to change the culture of this really big company. So it was a great experience. I was managing like 30 people there. We were doing over 10 million revenue by the time I left. And I knew I wanted to go back early stage after that 2-year period. And I was talking to a lot of people and exploring some different things. And I had a friend who's also an amazing podcast guest if you're looking for somebody. His name's George Valone, and he was doing tech sales. He was living in Boston, living in New York, and he ended up buying a commercial cleaning company in Nashville. And I was like, that is nice. The weirdest career path I've ever heard of. But I started kind of unpacking the layers with him. And I think imagine this will be interesting to the audience, but a couple things stood out to me. I was like, one, this is the best economic opportunity I could think of, right? That business was kicking off $200,000. It's a small business, kicking off $200,000 in cash flow a year. And the seller was asking $500K for the company. And I was like, nowhere else. I'd spent a lot of time, my dad's in construction, he's in real estate, spent a lot of time in real estate. Like any finance major in college, I spent a lot of time in the stock market. And I was like, you mean I'm getting a 2.5 multiple on cash flow? I'm like, that is insane. So it was like, this is a really interesting economic opportunity. And then I was like, this is actually such an accessible thing, right? I don't know where your listeners are at, but he used an SBA loan. He seller financed half of that business, used an SBA loan, got the rest, and he ended up putting like 5% down and bought this company. And I was like, and now put down 25K, and he got some money from some family and friends. Now he's making 200K, and he's a sales guy. So he expanded that business a ton. They're doing really well now, to the tune of multiple millions of dollars a year. And he's brilliant. And I was like, more people should be doing this. And then I started kind of unpacking that experience with him. And he was like, yeah, I found the business on BizBuySell. And if you're in the tech space at all and you go to BizBuySell, you're like, there has to be a better way. So this was like 5 years ago, and I got really excited about how do we build the modern BizBuySell and what would it look like to be the Zillow for buying and selling small businesses.
Very cool. And one thing that you guys have done that I think is that I find really compelling and is much more unique than BizBuySell or kind of the quote unquote listing pages, as a lot of people call them, is you've got an actual team of in-house brokers or investment bankers, right? M&A advisors that really do some real support work for both sellers and buyers. So maybe talk a little bit about how you took sort of this purely internet company model and bridged that with a more kind of hands-on service-oriented approach.
Yeah. And it's really interesting too, because like any startup, right? There are iterations to get to the spot that you're at. And what we found, like in this research, right? And I think it's important to talk about is there's a silver tsunami coming. McKinsey just came out with this report. It's like 6 million small businesses are going to change hands in the next decade, and 92% of them don't have a transition plan. So we were like, okay, let's go talk to these people. And what we found, this is again 5 years ago, is that nobody had any idea how much their business was worth, right? But they were curious because don't you want to know how much your business is worth? This is your most valuable asset. And a lot of people don't even know that they can access that value. They just figure that the business is going to die with them, which is a shame. And if you feel that way, you should come talk to me. But what we found is these people don't know how much their business is worth. So we said, let's start with a free valuation. And our assumption was just how Zillow started with the Zestimate. This will be our starting wedge, and we'll go see if we can get people interested in this. And then we think they're going to be different things we can sell them. Maybe it's a partnership model, and we do the Credit Karma for small businesses. Maybe there are other brokers that we might want to put into our network. And what we found is, one, everybody wanted to know how much their business was worth, and the value prop of a free valuation was a compelling value prop. But then after that, they were like, hey, Dylan, we wanted a valuation, or hey, Chat, who's my co-founder, we wanted a valuation because we want to sell. We like you all. You've explained, and legit, multiple people would say this to us. They said, you explained more about our business to us in the last 20 minutes than anyone has in the last 20 years. Will you just sell our business for us? And I was like, that feels like a really interesting opportunity. And we're big on this in general. It's like, if the customers are asking for something, there might be something there. So actually the first iteration of this was I went out, I talked to 100 business brokers, like Main Street business brokers, because I'd never been a business broker before. And I brought on 3 brokers as contractors. They were great. I learned a ton from them. And, a lot of them, particularly one advisor named Paul Cronin, helped a ton with kind of how does this process work today? And they would be able to do like 5 to 10 deals. And I was looking at the process and I was like, this was maybe 2022, 23. I was looking at the process and I was like, I think we should bring this in-house. And I think we can do a lot more volume and improve the quality. And what we're going to get out of this is we're going to know the experience really well and be able to build the right technology, because we were always venture backed, right? We raised our pre-seed round. All we had was a deck where we put $2.8 million together. At this point, after the free valuations took off as a wedge, we raised another $3 million. So we knew we were like, we are building $1 billion company here. That's what we're trying to do. And this is, for Chat and me, this is something that we want to be doing for a really long time. And we were ambitious in that. So I was like, let's bring this in-house. Let's build technology around the system, and we'll see, how that goes. So I became the first in-house Baton M&A advisor. At the peak, I was managing 60 deals, which was crazy. And this was before AI, before a lot of the technology that we had. But I had sold, at that point, at the peak of me managing deals, I had sold 14 businesses in 9 months. So something was working. Yeah. We were like, we have a really good process here. We know how to do this. And then the question became, okay, Dylan's a crazy person. He's doing all these deals himself. Can we actually build a team around this? So we started hiring like the girl or guy who's 2 years into investment banking, maybe 2 years into private equity, so mid to late 20s, and they're watching these MDs do deals. And they're like, I could do this. And we're like, okay, come do it. We're going to give you way more deals. They're going to be smaller, but we're going to give you a ton of deals. We're going to give you all the technology, and you can make a lot of, our best advisors are making like 350, 400K. And I know some of these other places claim more than that. I think nobody's done more deals than us, quite frankly. But we saw these young people can make a lot of money and take a lot of agency. And then because they're on the front lines, they have amazing product insight, right? So we just brought our best M&A advisor to run part of the product org with me. And now he's getting feedback from all of the other M&A advisors that we have. So what's ended up making us different is we are the best place to buy and sell a small business. I think Biz Buy Sell might still be the best place to get eyeballs, but if you actually are serious about buying or selling, we say you should come to Baton, which I think has been a differentiation. And for all the sellers and buyers out there, you actually have a person to work with, which is really important. And I think like education, right? And 92% of business owners don't have a plan to retire. And we say like education is our biggest gap, and that's our biggest competitor.
Yeah. Yeah. So there's some fantastic insights to pull out of that. I mean, if there's so many, you've got over 90% of business owners that either don't realize they can sell their business or don't have a plan or just believe that the path for a business is to wind it down. You're not going to fix that with, a listings website, right? There's got to be the human in the loop. And that's what the traditional brokerage industry has solved. But the brokerage industry historically, any one broker is only able to manage a handful of deals because you got to learn a lot about the business. It's very relationship oriented. You got to comb through buyers' proposals and figure out who's a credible buyer, who isn't. So many things that you guys have gradually introduced some great efficiencies and technology around so that you can manage a lot more deals in a way that actually, like you just said, educates both buyers and sellers on closing that gap, which is ultimately the biggest problem you guys are there to solve, right? So that's super cool. Maybe you can help us understand, a few of the key learnings or key ways you've found that Baton solves that and bridges that gap differently between buyers and sellers versus, say, a traditional business broker or biz buy seller, what have you.
For sure. And there's some amazing brokers out there, right? And it's a really hard job. I've done it in now a lot of different capacities, and I still take deals. So my hat's off to anybody who's doing it. And I think more people should go try to be traditional brokers. I think it's an awesome path, and in an underserved market, right? There's like 10,000, 15,000 brokers out there. And there's a lot more, millions of businesses that need to sell, 6 million businesses. Yeah. So I have tons of respect for anybody trying to do this. And so that being said, one of the crazy things, and anybody who's tried to buy a business has experienced this, right? Where you find some business on a listing site, you say, hey, I'm interested. You don't hear back, right? For a week, 2 weeks, you're just sitting there waiting. At some point you hear back and they say, here's the NDA, sign it, scan it to me or fax it to me, I was at the IBBA conference and people were still, this was in last May, so about a year ago, and people were still talking about faxing. I'm like, this is crazy. So one of the things that we did, we were like, we're going to have a platform NDA. We're going to have vetted buyers come in, they sign a platform NDA, and instead of waiting to get information on certain deals, and now certain people want to be a little more private, and maybe for good reason, but generally it's a platform NDA and you get all the information about the business up front. And it's really cleanly organized, right? Because as a buyer, what's the biggest thing holding you back from making a decision to purchase a business? And generally, it's information, right? You just don't have all the information that you need to make that decision. So we're trying to front load all of that. So we did that with a platform NDA. It's really easy to access all the data. We normalize the financials. We review everything. And then the other thing, and we get such positive feedback on this, is we just record video interviews with the sellers. So it's funny, like I've used the platform that we're using to do this, and I would sit down with the seller and we would just do an interview. And I'd ask all these questions and we'd give that to the buyer. And the buyer, out of all the things on the site, they say the NDA is one of the most valuable features because it's really seamless. But being able to get an insight into who the seller is so important. And ultimately, it's about building trust, right? So then we have a platform, and it's funny too, because I was spending a lot of time when I was managing those 70 deals, shepherding questions back and forth. I felt like a waiter. I'd like bring a plate over to the seller and I'd be like, hey, over email, I have this question from the buyer. Can you answer it? And then because the seller knew I was going to maybe tweak it a little bit, they would give me a really poorly written answer sometimes, but enough to get back to the buyer. And that back and forth, you get the question in the morning from the buyer. Maybe I'm in meetings all day, so I get that question back to the seller in the afternoon. They logged off for the day, so then they get back to me in the morning. And by the time I'm getting back to the buyer, it's 48 hours later. So one of the things that we thought, which sounds simple, right? But we were like, what if we brought the messaging into the platform? And that was a really big bet. And I was concerned about this because I was like, I don't know. We're going to have this direct interaction. Do sellers really value that I'm an intermediary? And we told sellers this was coming, so nobody was totally caught off guard. But I was still nervous that was going to be a negative thing. We launched that. We had a deal go from that conversation to a signed LOI 4 days later. So we've done all of these things. Now that happens, and nobody complained about it. Maybe 1 out of 150 sellers at that moment was like, oh, I wish you were still answering. But they even them can understand the benefit. Like, we're going to move way faster. And every time we've been able to move faster, the conversion also goes up from stage to stage.
Yeah.
So that's been it's been a major shift. And it's kind of like testing every hypothesis that we have of, why does this need to have a human in the loop? Why does there need to be an intermediary? And we found education, customer success, negotiations are all great places where, as a seller or a buyer, you want to have. I spent 30 minutes this morning negotiating a deal that's under contract and going back and forth between the buyer and the seller on the phone. I think that's a great place for me to spend time, or an M&A advisor to spend time. But there are a lot of these other things that folks just don't have to do that they think they have to.
That's a really interesting point. And I mean, for anyone who's in a, investing or transactional, line of business, the kind of friction that intermediaries often put between two parties, whether intentionally or unintentionally, can really spiral out of control. And in a lot of NDAs you sign with brokers, right, there's the kind of line that says, hey, you'll never talk to the seller unless I give you explicit permission, or things like that. Now, of course, there's leniency in there in many cases, but it's interesting to hear that you guys kind of took the stance to say, you know what, we're going to have a blanket NDA. It's going to make it easier to access information on any deal you want to within reason. And you can talk directly to the seller if you have questions.
And I mean, the crazy thing is, like, what are you doing when you're buying a small business? Our average deal size is like 1.4 million. It's been inching up, and we have some big outlier deals. We've also done $100,000 deals, right? We've sold these really small businesses, and this is relationships. That's what this is. And it's the number one thing. I'm doing a deal, and you see a buyer come through, and the first question they ask the seller is like, justify all of the ad backs for the last 4 years and provide doc. And it's like, whoa, slow down. It's like, first, let's just build some rapport. Let's make sure that you and this seller are going to work well together, right? And if you're doing these Main Street deals, it's different than the Wall Street private equity world that some of these folks come from. And it's like, let's make sure that we can build a relationship. And we've intentionally wanted to get out of the way so that the seller and the buyer can build a relationship, but that we can be there, a bit as a punching bag and also as a therapist, because, as you know, it's a hard process on every side. Yeah,
that's a really strong segue into something else I wanted to talk about, which is you've found this pretty unique approach where you're pushing more on direct relationship between the buyer and the seller, rather than kind of wedging Baton between the two. And that starts to lean a little bit more towards what a lot of people cite as a main reason for running a proprietary search or kind of acquisition process, right? A lot of people say, hey, we want to go directly to sellers so that we can, get to know them and build a real relationship, hopefully get a good deal out of that process. But at the very least, just get to know the person who built the business and have some more flexibility in kind of creating that optimal deal structure that works for both the seller and the buyer. Now, you guys are kind of creating that dynamic by enabling these relationships to be built. You've also got kind of these off-market deals that you put on the platform, right? Which is almost a similar sort of approach to kind of the proprietary search or acquisition process. So maybe help me understand how that kind of off-market deal concept ties into this overarching idea of streamlining the process, enabling people to build relationships, and kind of cutting out intermediaries where it's not necessary.
Definitely, yeah. And the number one thing that we care about is successful transactions, right? That's the only metric that we're optimizing for. So the off-market profile. So every process as a seller on Baton, if you're a business owner, starts with this free valuation. So we've never changed for the past 5 years. Everything is centered around the valuation. The reason we do that first, right, is because if we can't align on realistic expectations on price, we still let sellers set their price and we give them all the feedback, all the data. But if we can't generally be within a range where we're aligned, then there's no point in us listing your business. So that's why we start there. And then from there are two options, right? They're simple. hey, you're ready to sell your business and we're going to bring you to market. We're going to make it easy for you to go to market and then manage your listing. Or you can say, look, I'm not ready to sell right now, but I'm kind of interested. I kind of want to see what the market feels like. So what we did was we created this thing called an off-market profile, which is you get a valuation. So it's all real financial data. And instead of saying Sean's landscaping company for sale in Manhattan, New York, we're going to say landscaping company in New York, right? So super broad. There are a lot of landscaping companies. Now you have all the anonymity that you would want because it's really a stub, but we're going to show the financial profile. So we're going to say, here's the cash flow, here's the revenue. And of course, there's so many, as you know, there's so many more factors that go into making a deal and coming up with a price and figuring out what the right structure is. But what that lets people do is say, as a buyer, I can be like, I'm interested in a landscaping company in New York, and I'm interested at this price. Or I'm going to submit an informal offer because I really want to try to incentivize the seller because this just happened, this $20 million telecommunication business looks really appealing. And it is in my geography in the states that I'm interested in. So I really want to try to get them engaged. So I'm going to submit an informal offer. I'm going to give some information about it. And then what we do on our end, one, we have a dashboard where as a seller, you can see all of that information, the types of buyers that are interested in. And then our sales team can say, hey, you're getting a lot of interest in this business. Are you interested in coming on and running a process, right? And then what we do, if you're a buyer and you reached out to those folks, is you're getting messaged, one, when that deal gets a signed sale agreement, and then right when it goes live. So you're kind of getting a little bit of early access, but we're still running a process for the seller. Ultimately, the most important thing is we do the right thing by the seller. But these buyers kind of are getting upfront and engaged at the earliest phase. It's great to talk about it because on Search Funder, there was a thread and it was like, Baton seems great, but I don't really understand these off-market listings. Like, what is this? So I've spent time trying to explain exactly what the feature is because they're not totally off-market. They're not actively for sale, right? But they're just open to hearing offers. So it's similar to an off-market search that you might run.
Yeah, absolutely. I mean, everything's for sale at the right price, right? So that's
right.
You're doing the good service to sellers of giving them data points on, where their business, who's interested in the business, how much interest they are getting at the kind of, level they're at today. If they've got, and a lot, and I'm sure you guys hear this, we hear this too, but a lot of sellers will say, oh, I want to sell the business, but I want to get it to $1 million in earnings before I do.
Yep.
Right. So you might be able to say to them, that makes sense. Why don't you put it on an off-market listing and you can kind of see where people are coming in at, today and where that might be if you get it to $1 million. I'm sure that helps educate sellers, like you said, and avoid the risk of them just kind of winding things down. So that's fantastic. You touched on something there, some of the threads on Search Funder about Baton and the off-market deals. I know you and I had talked about this a while ago, but I'm curious if you have any other kind of anecdotes or examples of where, whether it's searchers or all types of buyers in general might have kind of divergent, call it expectations from sellers and just what to expect, when kind of getting into a process with an owner.
Yeah. Most of the time the owner thinks the business is worth more than it actually is, right? It's important to remember you're buying a small business. They probably don't have the cleanest books. They probably don't have the cleanest file system. They might not have SOPs for everything. And I'd say, if I say that and you go, ooh, that sounds too scary, you might want to just find a different way to spend your time. I think these transactions are inherently messy, right? And these businesses are inherently a little bit messy. And they're amazing companies. They've been around for decades and decades. They've built something more valuable than most people will ever be able to build themselves, but it's not going to be super clean. So I think one is like, you should go in with that expectation. If you're going in, coming from investment banking or private equity, expecting these companies to be buttoned up like the, billion-dollar deals that you were just doing, you're going to be so disappointed. And you're going to waste a lot of time when you realize that you're going to have to be the person fixing the toilets at 3 a.m. on a Tuesday night while your kid is crying and your wife's all mad at you or your husband's all mad at you. So, I think that's like a baseline expectation. And same thing I'd say is like go in and try to build that relationship, because that is going to be the foundation of being able to negotiate effectively. And we've seen time and time again, buyers will win deals not because they're at the highest price, but because the seller trusts them the most. So I think that's a really important thing. And then it's also why I'd say, and it's funny, we talk about proprietary searches. I'd say if you're a buyer, you should have that funnel going, but it's hard to be the translation layer, right? And it is really helpful. What we see time and time again, we talk to a lot of buyers, is that it's really nice to have a good intermediary in between to do some of that education. And I think that's like having that resource, and maybe it comes in the form, if you are doing a proprietary search and there isn't an advisor, maybe it comes in the form of an accountant who the owner really trusts, or a lawyer who the owner really trusts. But trying to have somebody who can walk the owner through some of these maybe more frustrating ideas that the business isn't worth as much as they think it's going to be. Now, we try to do a lot of that upfront as much as we can, and we try to display, we're like, hey, the valuation is going to come within a range. If we don't get in for the right level of interest, we're going to drop the price, because we have to feel out the market and respond to what people are saying. But it's challenging to educate a business owner on working capital requirements in a deal before they've had one conversation with a buyer, right? So I think it's like you have to go and be a partner and try to collaborate and work to the right type of structure. Now, the number one reason companies don't sell on Baton is because the owner has unrealistic expectations. So again, we try to set that as much upfront as we can, and we're doing a lot more. We're trying to productize a bunch of things. We're putting AI into onboarding to identify red flags and surface those to the owner, so we can talk about the impact on the valuation, the level of interest. But we're never going to catch everything, or maybe we will, but I don't think we need to be successful. I think I'm on a bit of a mission to educate buyers into how to engage thoughtfully in the space.
Yeah, I can tell. I mean, the fact that you're so centered on starting with the relationship, building that foundation for negotiation. I think that's spot on. It's really good. And frankly, the best deals we see kind of come from that place, right? They're deals that were built by folks who got to know the sellers over time, who really developed a strong understanding of the seller's goals, of the business, and put together a thoughtful structure that not only mitigates risk and positions the buyer and investors for a great return, but also truly accomplishes the goals of what the seller wants. And in many cases, that isn't just, hey, I want to sell it today and sail off into the sunset. In a lot of cases, as I'm sure you've seen, there's things like taking care of the team, taking care of the customers, maybe supporting a family member in continuing to own the business and to some degree and carry on that legacy, right? So there's so many things that are critical beyond just the headline kind of pricing. And you'll never figure that stuff out without building a relationship as a foundation.
And you have to ask, right? Because every business owner feels differently. Some people don't care about the legacy and the employees at all, and some people that's all they care about. And I think, just to give a shout out and a proof point of this, American Operator does an amazing job at this. And we've done a couple of deals with them. They are incredible. Almost every time the owner says, hey, these people are great, and I really like them. And I think they've realized that this is how you win deals in the space. They're one of the more focused modern teams that I know, at least. And if you think you're better than them, let me know. Let's talk. I'll get you some deal flow. But generally, they're really good at this, and I think they've uncovered something that's really special in the space, and more people should take really seriously.
Very neat. And that's, for those listening, American Operator was formerly known as Main Shares, and they've rebranded. So that's a great shout out, Dylan. You mentioned something that I wanted to dig deeper on. You're on a mission to kind of help buyers engage more thoughtfully in the space. what are some common pitfalls you see? A buyer gets on the phone with you or someone on your team or a seller, and you mentioned kind of hey, send me all, the rationale for all your adjustments for the past 3 years, or what's give me an AR aging schedule broken down monthly, yada, yada, yada. What are some of the most common pitfalls besides kind of asking for, the big information requests up front that you
Totally.
can
And I'll just say, like, those are important things to ask. And I think you should ask them and you should get insight and you should feel really good about making the purchase, because this is hard as a buyer too, right? You might be doing a personal guarantee, your family's future is at stake. You should do deep diligence. It's just about the right time to do that diligence.
Yeah.
But big endorsement for asking for all of those things.
Yeah. There was, just before you jump in, there was a great anecdote someone told me. I think when you're going, into a process, until you get to, call it, the initial offer or initial kind of proposal, it's largely sales and relationship building. But once you get past kind of the point where you say, okay, we're agreed in principle, then you can ask for more of the,
Absolutely.
heavy hitting information, that sort of stuff. But sorry, go ahead, please.
No, that's totally right. Look, I think there is sometimes this ego thing that comes in with some buyers, which it maybe is similar, but you just have to remember that there's a lot of great things that the owner's done to build this business. And hopefully you can come in and be value add, but you're going to learn a lot from that owner. So I think you want to go in with the kind of a beginner's mindset, and that should help the relationship piece too. The other thing that I think is, I probably have at least 1 to 2 conversations with somebody from some point in my life every single week who says, I'd love to buy a small business and be a passive owner. And is there anything on Baton that I can run passively? And I think that's a great goal. And I think going in and saying, I'm going to find a company that I can grow and manage, and at some point I can kind of step away from day-to-day operations. I think that's a phenomenal goal, but I highly suggest not starting there. I highly suggest starting from a place of, I'm going to take a personal guarantee out. I'm going to leverage my family's future, and I'm going to do everything in my power to make this business work. I'm going to move to this area. I'm going to spend tons of time with the owner and the staff. And right, this is an important thing. And I heard a lot of deals that go wrong. You have to get the staff to respect you. And it's going to be really hard to earn their respect if you're spending 5 hours for 3 days at the business, right? Like, oh, I'll spend Tuesdays through Thursdays at the business. And it's like, the staff is there from 9 to 9, 6 days a week. It's like, you think they're going to respect you because now you have the keys to the castle? Like, they'll go find other jobs. They're talented operators too. So I think just starting from the place of passive ownership is the wrong place to start. And ultimately and thankfully, usually deals will fall apart if that's what you're looking for earlier. Because what happens is you might go under LOI, you might start diligencing the company, and then there are going to be some, hopefully not red flags, but yellow flags, right? And every deal has them. If you've done a deal, you know that there is no perfectly clean deal, right? So there are going to be some yellow flags. And if you're looking for passive ownership, you're going to say, wow, this is too much of a headache. And that's fine. But I'd say if you're listening to this podcast and you're looking for passive ownership, like, maybe you could go save some time and just put it into the stock.
That's a great pitfall. It's one we've come across a few times.
We have 11% of the buyers on Baton say they're looking for passive ownership, and 0% of the deals that we've done, we're doing 2 to 3 deals a week now, 0% of the deals are done with one of those people that say they're looking for passive ownership. And
That's very interesting.
There's some deals on Baton where you really don't have to be that involved, right? But if you're going from the mindset of, I am not going to be involved, it's going to be tough. And it's why all the influencers who talk about this, I love that. I think they've proven something that we've known to be true, is that people want to be entrepreneurs, and the idea of controlling your own destiny and your own future is really appealing. But a lot of these influencers say you can buy something for 0% down and you can be a passive owner and you're going to be rich and you can go on a bunch of vacations, which might not be false, but it is the wrong place to start.
Yeah, that should be a North Star. And you need to recognize that it's going to take you many years, a lot of blood, sweat, and tears to get there. So
Absolutely.
that's a good, that data point, 11% of folks on Baton saying they're looking for something that, can be run passively, but 0% of those folks actually closing a deal with Baton at least. That's really interesting to know. Um, do you think that has to do largely with kind of the point you made that as they get deeper into diligence, they realize there's virtually no way to run this passively, or do you think it's even more kind of at an earlier phase in the process where maybe just the level of kind of effort to even get into LOI or start finding a business proves to be more than passive by any means. So
Totally. I mean, it's probably both, but to your point, it's and you've done deals, you know how hard it is to go through every step of the process, and it can take up a lot of time. So I think you're probably right. And also the thing that we see is if you're talking to the owner, it's like, I'm an owner. I've worked 80 hours every single week for the past 10 years of my life. I've taken 2 vacations. I mean, we just sold a painting business. This was one of the deals that we did with American Operator. And the owner hadn't taken a vacation since he founded the business. Great company. It was over $2 million in enterprise value. And the owner hadn't taken a vacation. So imagine telling that owner that, hey, I'm going to come in and I want to run this passively. The owner's not going to want to take a second meeting with you, right? That's where the ego comes in. It's like, man, you don't think they would have figured that out if they could have, if there was an easy way to be a passive owner. So I think there's also this thing where the seller is going to select somebody who they feel is going to work really hard. And most sellers do care about their staff and do care about the legacy, at least to some degree. And I think if you hear passive owner, I'm not going to be involved, business is going to run itself, you're like, wow, you're going to run this company.
yeah, that's right. If someone could turn it truly passive and just go, spend the rest of their life sailing in the Bahamas, that why would they need to sell it? Now they've just got an annuity, right?
100%.
So there's no need.
100%.
Well, look, we're coming close to the end here. I'd love to hear, any specific stories you have that might kind of give great examples of that concept of, helping buyers engage more thoughtfully or bridging, relationships for sellers and kind of setting expectations. Any good stories you have that you want to share with us?
Yeah. This was one of the first deals that I did. I'm going to try to anonymize some things because I don't want this getting out back to certain folks, but it was a great seller. It was a super small business, right? We really cut our teeth doing $50,000, $100,000 deals, which are amazing deals. And I'll make the argument more people should buy companies like that, and they can also be more challenging, different level of consideration.
That's hustle. To start there, that's real hustle.
Yeah, it's awesome. It's awesome. And these owners are great, and they're really passionate people, and the buyers are really interesting too in that level of the market. Anyways, this company again, small but really small, $150,000 asking price, and it was like a tiny food business, tiny food business, no physical footprint, like really small. And we had 3 competing offers on this business, which I was really thrilled about. We kind of ruled one out because it was a bit too aggressive, so we're in negotiations now, and the owner loved this one seller, and they were asking $120,000 straight cash for the business. That was it. $120,000 clean transaction. You do a month of training, and then you're out. And this owner was going out to do some other really cool ventures, and this other buyer, who the owner admittedly did not like, was offering $150,000 total consideration, or even a way to get to 170, 180K for consideration for the business. But it was on a 1-year earnout, and there were all these different things that we would have had to do for the owner to see that money, right? And the owner's asking me, and this makes sense, and we feel our job is to get you in front of as many buyers as possible and get as many offers as we possibly can, so you can kind of get a feel for the type of person that you want to sell your business to. So this owner is like, hey, can you go do another turn with this earnout group, and try to get a little bit more money up front and a little bit more money on the tail end? And I was like, who do you want to work with? Like, it feels like you haven't enjoyed the conversations as much with this earnout group and you really like this other group. And if you do the earnout, you're going to have to be working with this person for a year, maybe longer, because they might structure something else in the back end. It's like, is that what you want to do and how you want to spend your time? It was like, you know what, you're right. And we signed this smaller offer, $120,000, business closed, they're doing great. And this person's still living their dreams and on to the next thing. So that was, I mean, it was an early experience, but Sean, I see this with every single deal that I do. And when these things don't work out, it's because there's some level of trust or communication that broke down. Because generally the sellers don't want to go back out to market. It's a really hard process. And maybe the buyer, like, there are egregious situations, and we've sold a lot of businesses that have fallen out of contract and gone back under contract. But generally, if you have a relationship with the owner and you're going in with good intentions, I think you can get a deal done.
Very cool. Well, that's a great place to start. I mean, not a lot of folks will roll up their sleeves and sell businesses that are doing $50,000 a year as a starting point, at least. And, your hustles obviously shine through, and you guys are selling tons and tons of businesses of all sizes now. But the story, the theme there of really going with the offer, not that's necessarily the highest, but that's, with the person you want to work with the most, and that obviously also gives you the most certainty. I think that's something we talk about a lot, right? The certainty to close and the certainty that, the business owner is actually going to receive a healthy amount of consideration for their life's work. So great example. Any closing thoughts before we hop off?
I want to I've been vocal on social media, but I want to put out a request for more people to buy businesses of all different sizes. And when you zoom out, like we've talked about, there's 6 million small businesses that need to change hands. 92% have no clue what they're going to do next, and they have no transition plan. And then on the flip side, and I think this is really important, is you have a lot of white collar workers whose jobs are going to be replaced by AI. And that just is what it is. We have a 70-person office here. We thought we would triple the size of the team this year. And because of all the efficiencies we're getting, we're going to stay a lot more lean and mean. So I'm seeing that in my company. I'm seeing it in every other big tech company. I'm seeing it with my friends at these white collar jobs. And I'm not a doomer. I don't think we're not going to have work to do, but I think we're going to need to redefine the types of work that we want to be doing. And you have these two converging trends. And if you connect those dots, you say, for Main Street in America to be as vibrant as it has been, and even more vibrant, we need more people to buy small businesses. So it's a hard path, but I want more people doing this. And Baton's a great place to start. We're a great place to poke around. But just in general, the crusade that we're on is these businesses deserve to have new ownership, and more people are going to need to do this.
Love that mission and that message. And yeah, if you can take the big picture trends of the silver tsunami plus the wave that AI is bringing to the table and kind of blend the two, there's a lot of opportunity. I mean, we see it. Sounds like you see a lot of folks are excited about it. So very good. Well, Dylan, thanks for joining us. It's been great.
This is awesome, Sean. Thanks so much.